Hello friends, welcome back to my channel Technical Analysis Made Simple. Many a time you would have heard people referring to daily chart, weekly chart, hourly chart or 15 minutes chart, 5 minutes chart. You would have thought, what does this really mean? It is known as time frame, the trading time frame. In this video, we will understand everything about the trading time frame. So stay tuned. The agenda for today is like this. What is a trading time frame and how to check that in a chart? Importance of higher time frame, best time frame for your trading style. Many a time traders do not know which time frame to use and they just keep jumping from one time frame to another and coming out with different conclusions. Here we will discuss what are the best combination of time frame that should be used. First of all, let's understand what is a trading time frame. A trading time frame can be defined as the time which a candle takes to complete itself. What do I mean by this? When we talk about a candle, it takes a particular time to complete itself, right? So if we talk about 1 hour time frame, this means that the candle will complete itself in 1 hour. Before this, any conclusions are not valid because many a time there could be drastic movements which happens in the last few minutes of the time frame. Let's look at an example. So let's consider this particular candle opened at this level and then in the first 15 minutes it made a low at this level. If we follow this candle for the first 15 minutes, it looks like a good sell off candle. And in fact, it looks like a bearish Marubozu. Let's say in the next 15 minutes, that is in first 30 minutes, some buying happens here. Now this candle looks like a belt hold, bearish belt hold. In the next 15 minutes, more buyers come in, and this looks like this kind of candle. And finally, the candle finishes like this. That is, it hits a high, then it closes at a higher level than the opening level. This candle is very similar to a hammer. Now, just consider the candle which was looking completely bearish has now turned into a bullish candle. So this is very important that whichever time frame you are following, you should follow that completely. That is, if you see a drastic move in the starting part of a time frame, you should not get affected until and unless that candle finishes. Same thing happens when you consider your stop loss on a closing basis. Now, time frame can be as small as 1 minute and as long as 1 month. This means that 1 minute time frame candle will finish itself every minute. So every minute you will have a new candle on the chart. Similarly, a 1 month time frame candle will finish itself in a complete month. This means a candle for a particular month, let's say for October, it will finish only on 30 or 31st, whichever is the last day of the month. Before that, drawing any conclusion is waste. It may happen that it is looking bearish or bullish, and then it completely reverses on the last day or last week of the month, so to say. The next is how should we change and set the time frame in TradingView. So TradingView is the platform that I have showed earlier also, and it is one of the best platforms for chatting. So let's see how we find out which time frame we are operating in and how to look at it. So if you see, we have this chart open here, right? So this is Maruti chart, although the name doesn't matter. The next block here you have the time frame options. You have 1 minute, 3 minute, 5 minute, 15, 30, 45, and so on, hourly, 4 hourly, day, week, month. And from here you can choose anything. So let's say if you choose the monthly chart, now Maruti looks something like this on a monthly chart, and you can analyze that what is the long term trend for this. So if we try to analyze that, we see big red candles here, right? So which means Maruti is for now in a downtrend till it changes its shape, and that might take some time. Similarly, you can go to weekly chart. Weekly chart will look like something like this. Note that each of this candle take a whole week to form. That is, this candle starts on Monday and it finishes on Friday. Even if you see the date, it shows 20th Jan. Then it showed 27th Jan. Similarly, here it shows 30th Jan, which means it takes 5 days to complete. Saturday, Sunday, market is closed. You can also go to daily chart. This is a daily chart. And similarly, you can also go to 1 minute chart and see what was the action here for the whole day. That is, the video is being recorded on 21st. And here you have a candle and how the whole day it went. Okay, so it is minute by minute reading. If you feel that minute by minute is too fast for you, you can go to hourly chart. Here you will get 6 hourly candles, right? These are the 6 hourly candle, and the last candle is of 15 minutes because the market opens at 9:15 and it closes at 3:30. Okay, let's proceed. I would strongly suggest using two time frames at least for your trading and investing decisions. Let's try to understand it. So a higher time frame gives you a background story of how a chart looks like. I mean, it may happen that the time frame in which you are trading, it is showing a different picture. And if you do not have a proper visualization power, which do not happen in a day or two, it takes time, then you need to refer to the higher time frame, like what is the trend in there. The trend in higher time frame will always govern till it changes. So let's say if you see a small uptrend in a daily chart, then you have to verify whether that trend is an uptrend in the weekly chart also or not. Otherwise, this trend will fizzle out. Let's look at some of the examples. Here I have the chart of Delta Corp. The upper chart is a weekly chart and the lower chart is the daily chart. Now, see how on daily chart it has a uptrend movement, which is very clear from the trend line here. But if you see the weekly chart, this is completely going in a downward slope, right? It is making lower highs and there is a clean trend line here. This marked area is magnified here on the daily chart. So it looks like a good trend, but is it really on a uptrend? It's not. Once it reaches the trend line, it might get sold off again. This kind of stock you should avoid because here the selling pressure can be very strong. And if you see here, sometimes it gets rejected even before reaching the trend line. So you should be very careful while choosing a chart. It should be on an uptrend in at least two time frames. That is your trading time frame and the higher time. Let's look at one more example. This is the chart of Sequent Scientific. If we see since April, this has a good uptrend, right? This was at 60 rupees. Now it is somewhere close to 150 rupees. So if you see the daily chart, it is also on an uptrend. So you should look for stocks like this that is on an uptrend in a higher time frame, and then any retracement on the lower time frame can then be used to. So now many of you must be thinking that this is fine, but how do I know which time frame combination should I use? Right? This is a common question and this is a very valid question. So the rule here is one should use time frame combinations which are in relation of 3 to 6. Let me give you an example. Let's say you are using monthly and weekly. So 1 month has 4 weeks. So the relation is 1 is to 4. Similarly, if you are using daily and hourly, a day has 6 hours. So it is a relation of 1 is to 6. Similarly, 15 minutes an hour has 4 15 minutes. So it is again in a relation of 4. So I hope this point is clear. Let's move forward. So if you are an investor, you need not be worried about day-to-day movements or you need not be worried about 5 minute, 10 minute intraday movements. So best time frame for you is weekly and monthly. You analyze a chart on weekly time frame, then you look at how the monthly chart looks and you make your trading decisions. A positional trader, on the other hand, should be a little quick, and this person should be looking at daily and weekly charts. Swing trader tries to capture one swing, and it becomes very important to capture the swing. So here, a little more monitoring is needed, and hence hourly and daily time frame is advisable. Intraday trader, on the other hand, should be looking at 15 minutes and hourly time frame, like how the hourly chart looks, and the trading decision should be made on 15 minutes time. A scalper, on the other hand, a scalper is a person who looks at very quick trades. So this person should be looking at 5 minutes and 15 minutes chart, and wherever the opportunity arises, this person should jump, take money, and get lost. So this is how different time frame combinations work. If you have any questions, drop them in the comment box. I will answer them. Also, do not forget to subscribe to the channel and share the video so that it reaches maximum people and maximum people get benefited from. That's it for this video. Thank you so much.